This is how I made $75,000 trading prop firms in 2023. What's going on, guys? Welcome back to another video on trading with GM. My name's Alfie and you may have seen me in the GM Discord trading gold using my intraday and my scalp strategy. Throughout this video, I'm going to be explaining to you guys how I made $75,000 trading prop firms using these strategies. Over the course of 3 months, I managed to make $75,000 trading prop firms like FTMO, Bespoke and MFF. But the big question is, how have I done what I've done? And the answer is very simple. Consistency and a well data backed model. For the past 2 years, I've been studying, refining and collecting data on gold. On paper, these strategies were making up to 600% per year. After seeing these results, I went straight for a prop firm account. I didn't forward test. And the reason for this is I wanted to make sure that I had some raw emotion trading a live account rather than forward testing where you don't have that emotion when you're trading that account. This then gave me realistic live data that I could then apply to the strategy and refine it even further. And because of this, I was able to find some holes within the model that I wouldn't have found maybe if I was forward testing on a fake account. Now, obviously, I wouldn't recommend going to a 100K or a 400K, 500K account. You want to be looking at maybe a 10 or a 50K account. This way you can have that raw emotion, but if you lose, it doesn't really cost the bank. So now let's talk about what the strategies actually contain. Firstly, I have my intraday model, which works off of London continuations. And what I'm looking for is I'm looking for London to be bullish and then New York to be bullish. This didn't prove to be quite that profitable. So what I did is I looked at the model and I thought, how can I combat this? And what I found out is I had a 55% chance of New York continuing London. Taking this data away, I knew that there was a 45% chance that this trade won't play. So after a lot of thinking and quite a lot of creative thought, I thought, okay, what can I do? I can apply hedging. And this is where I use my experience of scalping to get into hedge trades to combat this 45% chance of price falling through. Which is funny because this ties into my scalp model. The hedge for the intraday is also my scalp model, except for one difference. The scalp model I can use all over the market. It isn't only used at a London high or London low. So with that, let's look at the scalping model. In the scalp model, I don't use traditional concepts. I use concepts that I have created on my own. Concepts like indecision and reversal time. These concepts and many others that I've created over these couple of years are what I teach the students within GM. So now guys, we're gonna move on to the trade breakdown. Now, if you are confused about anything that's broken down, do head to the free Discord to ask any questions you might have. So here we have a London short, and straight away when coming to the charts, I come to the charts at around 7 AM, which is around this green box here. What I noticed was, looking on the 15-minute, is we can see straight away all of these wicks to the upside here. Now, all of these wicks are showing one thing. They're showing that the bulls are losing control. But why is this? So we're having a push up, which causes our wick, and then the rejection, which then finishes the wick. We have that again and again and again on the 15-minute, which is just showing that the bulls are losing control and the bears may take over control at some point in the future. So we come to Frankfurt and we have to look at the 1 minute for this. Now looking at Frankfurt, straight away we see that we opened up very, very bearish. We had a fake move to the upside and then the bears took over and started to move price down. Shortly after this, we saw that we had a rejection at the Frankfurt low here, and then we pushed all the way up and caused this larger region of indecision. Within this indecision, we see that the bears are quite a bit stronger just in the candles that are forming. If we're looking at some of these bearish candles here, we can see that they're a lot stronger than the bull candles. Once we're watching this, what I like to do is I like to look at the actual candle development. How is the candle developing? What is happening within the candle? As I was doing this, I noticed that the bears were a lot stronger in this entire region here. After the bulls then caused this up move here, we then saw this region of indecision, and this is one of the most important aspects of this trade. Without this, I likely wouldn't have gotten into this short. Once we caused the indecision, we did then end up moving to the downside. Entry was within this POI here, and then we moved to the downside. And just to show, this is one of the trades. There was a few trades that day, but that was one of the first trades of the day there. And this is just to prove that this was on a live account. If you guys want to learn my strategy in full, then check out the GM blueprint below. Thank you for watching, guys. And if you like this video, make sure you click the like and subscribe button below.